Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, if you recently purchased or have been thinking of investing in insurance, chances are you would have come across the term riders. This forms an integral part of any insurance policy, especially if you're looking for additional protection against potential risks. Now, in simple terms, riders let you customize life as well as non-life policies to better suit your requirement. Now, despite all the product innovations that health insurance has witnessed, many are still averse to the idea of paying a higher premium for additional riders. Now, this brings us to the important question: is it wise to invest in insurance riders at all? Now, let's delve deeper into it and learn more about what it entails for consumers. Now, joining us in the studio is Yashish Dahiya, CEO and co-founder of Policy Bazaar. Welcome to the show, Yashish. Now, how important are riders and what are they? I mean, can you explain that, please?
So think of it, like ordering a pizza, and if in the pizza you do not order your toppings, then the pizza will be a very bland pizza, chances are. So the riders are exactly like that. You are buying a product for risk. You need to understand what risk you are is being covered, and hence your riders enhance those risk coverages and make your policy complete to cover the risks that are there. So just to give you a perspective on this, suppose somebody is buying a child insurance plan. A child insurance plan has a particular return and a particular life cover. But what it does not have all the time is, if an unfortunate event happens, the future premiums need to be waived off. So there'll be a rider called waiver of premium rider. There may also be a rider called family income benefit rider. Now, these are what you typically know as riders, and the riders make the policy complete towards its final purpose.
So what you're saying is that you definitely need a policy, and then you need to reinforce that policy with certain riders.
Absolutely. So you need a policy, whether it is life insurance or general insurance, and riders are the add-ons that complete that policy's worth. Whether you're buying a motor insurance policy, a health insurance policy, or a life insurance policy, examples of it can be multiple. Suppose one is buying a car insurance and you take a zero depreciation cover. Now, a zero depreciation cover is a rider. The zero depreciation cover means that if the car gets damaged, you get the full amount, not half the amount if your car is depreciated by 50%. So this is how riders work. If somebody is going into a hospital, they may have something like a surgery care rider, which means all surgeries, listed surgeries, are also covered, even though they may be daycare treatments. So riders, one needs to really understand what one is buying, and then purchase them. But they make the policy complete. Without the rider, sometimes the policy may not be.
So you can't buy useful. Riders independently of a cover.
You certainly so you can't buy riders independently.
Or a base policy.
Yeah, so see, the rule is that on a policy where you are spending 100 rupees, you can spend 30 rupees more on riders. Riders are, with a few exceptions, riders are mostly not adequate to give you full coverage. They are just so like...
as you said, it's like a topping, but it reinforces your plan.
It's a very simple example. If you, on your pizza, you put some pineapple, it is not the same as eating a pineapple.
Precise.
But yes, it gives you some taste of the pineapple.
Right. So what's the difference between riders and covers then?
So, no, a rider is a form of cover. It enhances your cover. So you have the base policy on which you can spend 30% more money in buying riders, which complete that policy. However, then there are standalone plans. Standalone plans are like having the pineapple. So in a standalone plan, suppose one takes a cancer care rider or a critical illness plan, or a critical illness rider, the two will be very different. The critical illness rider will be fairly limited. It would only, you can only spend a certain percentage of your money on it. Whereas a standalone critical illness policy, you can take it as large as possible. So
let's go step by step. What are the riders for, say, life insurance policies?
Okay.
And which are the important ones that one might want to look at?
Sure. So see, in life insurance, they can come in multiple formats. The one important rider that you would have is this waiver of premium rider. Similarly, income benefit rider. To some extent, I have explained what these means.
Yes.
This means if an unfortunate event happens, the premiums no longer need to be paid and the policy will continue. Or in a certain situation, money may actually be paid out to the family because the family may be in a little bit of a need of income, which is not part of the sum assured, which is not part of the original payout, right? The second kind of riders that come in are which enhance risk. So you may have a rider for disability.
Right.
So in case any disability happens, half the sum assured is paid. So what that would mean is the person is alive, but maybe they've lost a limb or lost eyesight or something, in which case half the sum assured will get paid. So if they have a 1 crore cover, 50 lakhs gets paid. Now that is a significant amount of money and it's quite useful. So those kind of riders exist. You can also have critical care riders. So riders will come in two formats. One which will do something in terms of premium payment or some income benefit. The second would be which just enhance the risk the cover altogether to cover more risks. Similarly, if you go on to let's say health insurance, if you moved on to health insurance, you would have multiple sets of riders. You can obviously have critical illness, you can have surgery cover. Now surgery cover, let's not confuse this. Most medical plans require you to be in hospital for 24 hours at least. So if you're there for 23 hours, chances are you won't get paid at all. The claim will not be paid. But there are many surgeries which do not require you to stay in hospital. So you can have daycare surgery procedures, and those can be covered. That would come as a rider. Now, when one is in hospital, the hospitalization cost is not the only cost. The consultancy and medicines is not the only cost. There are other costs. Families moving back and forth, you're not being able to attend work, etc. So you may have a hospital cash rider. So up to 180 days of hospitalization, 2,000, 3,000, 4,000 rupees is paid every day. You may have further riders in the sense that you have room rent cappings. So you may have room rent capping waivers. You may have super top-ups or top-up riders.
So, but it sounds a little complicated. Now, if you had to plan your own portfolio, which are the three add-on health insurance riders that you would take on?
Sure. I would mostly go for standalone policies. Most of the riders, in my view, make little sense because the enhancement they provide is very limited. So if I do want to take a cover, suppose I do want to take a critical illness cover, I will go and buy a critical illness plan. If I do want to take a super top-up or a top-up plan, so I have a 5 lakh rupee plan, let's say, I can enhance it with the rider to maybe 10 lakhs. But I would rather go and take a separate plan altogether and enhance it all the way to 50 lakhs. Would one realize that for someone like me, taking the plan from 5 lakhs to 50 lakhs may not cost more than a few thousand rupees, because that's how top-ups work. So, I can take a standalone plan which would not be very expensive. So I'm personally more a fan of standalone plans, but everybody does not want to take too many policies. Even that gets complicated, and everybody does not want to understand insurance to, that extent of its utilization, although they should. So the riders I would suggest in health insurance, the surgery care rider is important because surgeries do happen. And, if they're not covered, the expense does happen. They're quite expensive, 75,000, 80,000 rupees, 1 lakh rupees one could spend on certain surgeries, which do not require hospitalization. So that rider is quite important. I would say the critical illness rider can be helpful.
So surgery, critical illness?
Critical illness. I would also say if you can get a room rent capping waiver, that is helpful. In addition to this, if you could get maybe some cash benefit if you're in hospital, but this would be specifically if you are on the lower income side. So it also depends, right? If you're on the higher income side, you don't mind spending the 5,000-6,000 rupees a day that's going to cost you. But if you're on the lower income side, it's going to impact you. So you might as well take a hospital cash benefit rider. These again don't cost very much. They are quite low cost because the chances you're going to be in hospital is quite low, and in that situation only they pay out. But they make sure your entire cost is covered. So those are riders that I would go for.
So let's talk about motor vehicles and riders therein. And also if you could, tell our viewers a little bit about specific riders to do with, say, the monsoon. I mean, we see the jams in Delhi, in Mumbai, different cities, cars stranded on the roads there. What would be important for them?
Sure. So when you talk about motor insurance, I'll go in terms of, importance and the popularity of these riders. The most critical one is zero depreciation cover, which one can take up to about 5 years of the vehicle being there. See, if a vehicle is 5 years old, it's depreciated by a good 50%. If an accident happens, for all the replacement of parts, one only gets paid about 50%, right? So if you have a zero depreciation cover, you get paid 100%. So zero dep is quite important so that you don't lose money because, you are having to pay for new parts. It doesn't matter whether the parts are old or new. as far as the consumer is concerned. The second rider, which is linked to this and the monsoon, is something known as engine protection rider. Now, engine protection, most of the customers would not be aware that if your, which happens a lot, if your vehicle stalls in water, you're not supposed to try and restart it. You're supposed to just stop and call your, roadside assistance person to pull it along. Because if you try to restart it and water has gotten into the engine and the engine seizes, you will not get your claim unless you have an engine protection rider. This has happened to a lot of my friends, expensive cars, driving around Gurgaon, which gets flooded, and they try to restart the car 3-4 times, the engine stalls, they do not get the claim.
And that's the first question they ask you, actually.
Yeah, that did you try to, they figure it out, that the engine is stalled. So basically, engine protection cover protects you against any oil or water leakage, which may have happened and you may have continued to drive after that leakage is happening. Which is, in my view, this should be covered automatically, but the insurance cover does not cover it, and it has to be bought as a separate cover. Some companies have it. I think the third one is roadside assistance. See, we don't take these covers. You're driving around somewhere, specifically out of the city. Your car stalls. What exactly do? You are at the,
and it happens all the time.
It happens when you don't expect it.
Precisely.
It happens when you don't expect it. You are completely at the mercy of the local elements there. Instead of that, you can get proper service. The crane will come, it will pull along your car. Somebody will come with a water bottle. So I think roadside assistance is quite an important cover. Many times we've seen we lose keys. So loss of key cover, but these become somewhat less important. But I think those three are the most important ones. There is a fourth one, which I would personally purchase, which is called the no claim bonus protection. See, I may have 5-6 years of no claims bonus. One little claim I make and my no claim bonus is gone. You might want to take out a rider to protect your no claim bonus. So I think that is the fourth.
So how does that work? Really quickly, because we have to go in for a break.
If I have, suppose I have 5 years of no claims, and I have a small accident and I make a claim of 10,000 rupees. If I make a claim of 10,000 rupees, I will lose my no claim bonus. And my no claim bonus may be 50%. So I may be paying 50% the price of a policy on a normal basis. Now, if on the other hand, I had a no claim bonus protection, then up to 3 claims, I would not lose my no claim bonus. And I would still have 50% no claims bonus, even though I have made some claims.
Interesting,
so
very, very interesting.
One can take that out.
All right, maybe I'll take that up. Yashish, is there a limitation on the number of riders that you can buy with a base policy?
There isn't a limitation on number of riders, but there is an overall capping in terms of the spend you can do on riders while the base policy stands, and that's 30%. And the real reason for this was so that, through any form of mis-selling, etc., it doesn't happen. Because, see, riders can be complicated. And if the customer is not very sharp about it, he could be pushed something which he does not really want. And hence, to make sure that the total amount was never very large, riders were capped at 30%. But that is, given today's awareness level about risk and about riders, I think that 30% cap is quite limiting. And hence riders become fairly weak in their actual effectiveness. So that's the base limitation, that you can't spend more than 30%, otherwise there's no other limitation on number of riders.
Right, and now what about things to keep in mind when you buy a rider? And also, is it covered under the tax rebates that you get?
So if you're buying health insurance and you're buying the health insurance riders, they're covered under the health insurance tax benefits, which are today 25,000 rupees per individual. If you're buying on the life insurance side, then up to 1.5 lakh rupees of spend is covered under the ATC. And riders also get covered under that. So if you invest 1 lakh rupees and you invest a further 30,000 rupees on riders, then the overall policy is 1.3 lakhs, and that is also covered within that. So taxes are certainly covered. However, while purchasing riders, be absolutely sharp about, do you need this rider? What other riders do you need? Even if you can't purchase them, go and buy single plans. I think overall our awareness of risk and our awareness of insurance that can cover these risks is fairly limited, and our belief that we would actually get the benefit is also, as a country, quite limited. So focusing on riders, focusing on risk-based products, I think is important. So I think the real question is not whether to buy riders or not, but whether to buy riders or standalone plans. And that is how the consumer should start thinking.
Right, Yashish. Well, it's time to take your questions, and we've got Ravi Shankar, and he's asked for us to recommend a Mediclaim policy for a 60-year-old individual. Would it be possible for him to claim benefits during the tenure of the policy, and of course the right kind of policy as well?
So there are two kinds of policies that the person could go for, either a senior citizen plan or a standard plan. A standard plan would require medicals at that age. So if his medical condition is quite good, then he should go for the standard plan. The standard plan has no limitations. He would be covered with the usual wait periods and the exclusions on pre-existing diseases for those wait periods. After that, he'll be covered for everything, and he can certainly make his claims. If he's not as fit, then he can go for a senior citizen plan. Most of the senior citizen plans, while they don't have large wait periods, they will have some element of copay. The copay could be 20% to 50% depending on plan. So there are some plans which are simpler and will keep the copay at maximum 20%. But in some plans, it can go up to 50%. I'm personally not against copay. I think copay is a good piece because if you spend 1 lakh rupees and 20,000 goes from the individual's pocket, the individual feels a bit of a pain of that spend, and it keeps the hospitals and all a bit under check. So I think it's not a bad idea to take a senior citizen plan. And I think clearly before 70, 75, there are senior citizen plans that one can easily get. So those are two options. There are lots of companies that one can get these from, but those are the fundamental options that the person has.
Right. Final question, Yashish, is from Anushri, and she asks, are there any specific scenarios wherein someone's claims can be rejected by insurers, especially in case of critical illness?
See, a claim will usually only be rejected if, number one, there's been some misdeclaration. And that too, now the rules say only up to 3 years. After 3 years, it cannot be rejected on basis of misdeclaration also. That is primarily to just make sure that people don't use misdeclaration as an excuse not to pay. The second element is, do read the fine text, or go to places like ours or a few others which explain the fine text to some level so that you understand it in common man's language. Fundamentally because, some things will just not be covered. So, for example, you mentioned critical illness. It's possible that stage 1 cancer is not covered in critical illness. Now, I'm not saying, so every critical illness plan is somewhat different. Even in critical illness, there are 37 diseases called critical illness. Some will cover 15, some will cover 37, some will cover 20, some will cover 21. So you do need to understand what is covered and not covered. Because otherwise you would be in for a nasty surprise.
Right, Yashi, that's all the time that we have. But last week we asked you a question, how much tax is exempted in life insurance? And the answer is 1,50,000. The winner is Shashi Sharma. Congratulations. Now this week's question is, insurance involves transfer of A, risk, B, ownership, C, liability. You can send in your entries to queries@policybazaar.com, and also you can tweet us at Twitter at @policybazaar_in. As I said, you can email us at queries@policybazaar.com. Thanks a lot, Yashish, for joining us on this show, and we'll see you with another episode of Policy Bazaar. Goodbye.